in the days and weeks ahead. That may seem like a long way away from where it is right now, but in my respectful opinion, that's a very feasible trade. Now, when we look at some of the other currency pairs going into the major pairs, we're going to stick with the major pairs here. Looking at the pound dollar, you can see is actually following the US dollar to some degree. It's come down and it's touched the 18-day predicted moving average from Vantage Point, but we don't have an actual sell signal on this yet. I'm really impressed with how sterling has done this past week, because I was short on this myself and I struggled with it, and because I kept expecting a break of this level and it just wasn't happening. Now, we are getting a little bit overbought here. It's starting to flatten out. We've got the Bank of England, I think, coming out next week, so we'll see how this one plays out. But for now, when we're looking in Forex to buy or sell US dollars, if we're looking to buy US dollars, this, in my opinion, may not be the best place to do so. Which brings me to this pair, which I think is a good place to buy US dollars. Now, the Euro US, with my own clients this week, numerous recommendations for shorts on this particular pair. The Eurozone is truly a mess. What's going on there? They're cutting rates. So, you know, the problem is short coverings here. The market starts to get short, all of a sudden we get a pop higher. I would still potentially be looking for that pop higher and use any strength in this particular currency pair to sell it. My concern again here is these candles are starting to rise towards this Vantage Point 18-day predicted moving average. We've closed at 137.82. That is still bearish. Now, where we're going to go from here, this is going to be a tough call. If I look at the medium-term crossover from Vantage Point, this looks exactly like the US dollar index, but in reverse. The dollar index, the medium-term crossover was to the upside, predicted MACD, predicted TSI to the upside. You can see that this is all pointing down. If I'm right and the dollar goes on a real rampage in the next couple of days, couple of weeks, then Euro US, we would be looking at targeting back down in the 132 area. That is a very realistic possibility. The ECB's cutting rates. Greece, I'm not even going to comment on. Italy, big concerns there. Much bigger economy than Greece. Greece is circling the drain. That's all that's happening here. It's going down either way. So, but Italy is a bigger concern. So, again, looking at this, the brokers would love to run the shorts out of the market, but smarter traders, they're going to be looking for the premium opportunity to get short on this pair. That is exactly what my play will be in the coming days and weeks ahead. This puts me into the US Swiss franc, very similar trade. Longs are the way to go on this one also. You look for places to buy dips. It's certainly not, it doesn't look great from this chart, but it still looks okay. The predicted short, medium, and long-term differences still pointing up. Our medium and long-term crossovers are somewhat flat. So, you know, if we look at this, it's basically running flat, but my opinion is that the Swiss franc will fall prey to the dollar strength. And this pair here, I would be targeting 90 and above. That's what I would be looking for on this particular currency in the days and weeks ahead. Now, coming into some of our other pairs, let's have a look at the New Zealand US. This is basically the same as the Aussie US. This is a risk-on, risk-off currency. If risk is off, this currency is going to move lower. Key levels now, 79.78, 79.83, and 79.47. So you can see where we've closed. Our predicted MACD and predicted TSI still looking for a directional move here. They're sitting right on the zero line. This one's a tough call. Biased, however, remains to the downside. Now, looking at the US-Canadian pair, horrible jobs number came out. The unemployment rate actually went up in Canada, so while the US unemployment rate went down. So kind of an interesting play there. Now, the CAD is a funny currency. It can still follow. If the dollar really gets on a tear, the Canadian dollar could follow it, and this pair could be a tricky one. We've closed at 101.68. To begin the week, 101.18, 101.11 down in this area. I personally favor longs. You can see that the predicted MACD, predicted TSI, and the predicted short, medium, and long-term differences all pointing higher. When we break this down by crossover, our short-term crossover has been pointing up the entire week. The medium-term crossover, about 3 days old, but it's pointing higher. The long-term crossover is flat, so we still have some volatility there, but my opinion is we're going to push higher on this particular pair. Canadian dollar also, don't forget, it's also a risk-on, risk-off based currency. Equities plummet, so does the Canadian dollar. So it's still very highly tied to the euro, the Aussie, the New Zealand. Dollar yen, we got a nice pop on this. I talked about this in the Forex Weekly Outlook that regardless, we continue to stay long while above the 75 level. They pushed the limits last Sunday night all the way down to 75.35, coming dangerously close to my own stops. But then we've got the intervention, we got this huge pop. Now, what I like about this particular trade, staying long, we can identify the levels, 77.10, 77.51, and 78.04. We've closed above these three levels. Dollar yen remains bullish. The dollar remains bullish. Remember what I've said on the dollar index. That dollar index is looking like it's ready for breakout type levels. So this could or should push the dollar yen much higher. The only thing that can stop that is the risk-off based trade, where you could have safe haven flows moving into not just the dollar but also into the yen. So this pair, a little tricky. As long as we stay above 77.10, my opinion is 80 and above is still within our sights. Again, we are overbought. You can see the short-term predicted difference moving lower, but again, as long as we can hold these key levels, I think we're okay. Predicted MACD, predicted TSI, they are not overbought. We have room to extend on that. So longs still, I still favor longs for the time, at least for the time being. So we are going to have a very choppy week ahead in the foreign exchange, equity, and commodity markets. There's no question about that. But there are clear patterns. Taking all the noise out of this, we can see some clear patterns. Whereas right now the equities are flattening out, and we've got that very bullish looking signal on that dollar index looking at the Vantage Point software. So with that said, this is the Forex Weekly Outlook for the week of November the 7th, 2011. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.